right, so I want to go over a trade, well, two trades that I took this morning. This is going to be a little bit of like a rapid fire breakdown. I'm trying to figure out the best format to do these breakdowns. I don't know. So sometimes I feel like when I go through the price action first and then show the recording, it makes the video a lot longer. I'm not sure if that's a good format to use. So I'm going to try this. What you're looking at right now is my recorded session from this morning. So when I started recording, that's when I showed up to the computer. So you can see in this video, the time starts at 8:46 a.m. And this morning on Telegram, I sent you guys a message at 8:41 saying I'd like to look for longs after the news, because we did have news at 9:45. And I was saying I'll try if the market gives me my setup. And at 9:24, buy side liquidity started being hit before 9:30. And so when I saw that buy side liquidity started to be taken, I was looking at prioritizing shorts. All right, so I want to show you what that looked like. So before I hit play here, you can see on the left I have my London session high on S&P, and you can see how we have these relative equal highs here. This is what I wanted to trade up to at market open. On NASDAQ, we had equal highs over here on the previous day high, so you can't really see it yet, but over here we have equal highs as well. So let me hit play and let me show you what that looked like. And this is sped up, guys. So look, I'm just gonna hit pause right here. The equal highs you can see are at London session high on S&P, and the equal highs on NASDAQ are at the previous day's high. All right, so this is not the same area that you see these equal highs on. These are two different areas on these markets. One is at London session, the other one is at a previous day's high, so Thursday's high. Okay, so it's 8:50 right now. Looking at the clock here in the video, I'm looking at the clock, and you can see where I put this little timestamp for 7:25 a.m. And basically I put this here so I could see what price looked like at that time on each chart, right? So you can see how 7:25 a.m. took out my London session on NASDAQ, but 7:25 on S&P did not. Now look what happens. It's 9:08. Price starts pushing higher really strong. Okay, and this is prior to news. We get a little bit of divergence here at the 7:25 a.m. high, and shortly after it just runs it out on both markets. And you can see that as we get closer to news, right? So now look at how S&P on the left takes out London high, whereas NASDAQ is heading towards previous day's high. So you see, previous day's high is symmetrical on both of these markets. It's the same time. Look at how much closer we are to previous day's high than we are over here on S&P. We're much further away. So if I hit play, all right, there's that buy side liquidity that just starts getting hit. And I'm going to bring up the message here. My buy side liquidity being hit before market open. This is at 9:24. And I stated there was some equal highs on ES. You'll see that in a second. So let's go ahead and see that. Now take a look. I just drew out this 15-minute gap right here on NASDAQ. You can see we didn't actually have one here. This candle was still open for 10 minutes. So there's no gap here. But there is a confirmed 15-minute fair value gap on NASDAQ, and this down close candle is currently testing it. So I'm watching to see if that holds. All right, you can see now price is exactly at the high of previous day on Thursday on ES. That's where I sent that message. Equal highs on that on S&P. But look at how NASDAQ is still bearish as far as the candle. It's a down close candle inside of that 15-minute imbalance. This imbalance ends up holding, and it goes on to hit external liquidity right there. This is news, right? We had news at 9:45. And now this is where I'm watching to see if price is going to reverse off of the previous day's high, off of Thursday's high, which it does. But this is how I got into the trade. So I'm on the 5-minute and I'm looking at this area potentially being a 5-minute gap. But watch what happens. Okay, we get that 5-minute gap confirmed. All right. So I'm prioritizing NASDAQ shorts right now. But I need to see this gap fail in order for me to have confidence to take a short. You can see over here there is no gaps for the 5-minute. The only one is here. It's quite low compared to where NASDAQ's is. So I'm not really worried about this gap. I'm looking at this area right here. Because even though I'm on the 5-minute chart, I drew this out because this low denotes a potential 15-minute imbalance. And you'll see that in a second. But keep an eye on this 5-minute gap and what happens when we go into it. All right, so I just paused here. You can see I jump out to the 15-minute and I got 4 minutes and 10 seconds on the clock, and I'm adjusting this line here, this low. I did it just then, right? So you can see the blue. I'm looking at the 15-minute chart, and I just pulled that line down just a little bit because I believe that this is going to be a 15-minute gap right here. All right, so it was confirmed. This is now a 15-minute gap. Even though I'm looking at the 5-minute, I know this means 15-minute. Look at the 5-minute over here. Remember, we reached into it on NASDAQ. So now I'm looking to see, can we get to external liquidity? If we do not, then I'm looking for a short. Okay, you can see we're starting to go back below the low that entered the gap the first time. So we just made a new low after entering that 5-minute gap. And look at this. Really bearish candle going deeper into that 5-minute gap. At this point, I felt like the 5-minute bullish imbalance was going to fail, which it did. You can see I'm on the 2-minute here. But look at the price action. We went into the 5-minute gap. We got a bullish reaction. But then look at this. The next candle takes the previous candle's high, right? We raid that liquidity, come back below, and then we just drag it even deeper. Heavy volume candle. Now, when I say volume, I'm not talking about buyers and sellers volume. I'm talking about size, right? This candle has a lot of size on it. So what I did was I used this this price action to take an entry on the 2-minute. So what you're going to see is the very next 2-minute candle, I'm watching for it to be the fair value gap, the creation of a fair value gap. And I'm looking to sell off of that candle. So you'll see that here. So you see me setting up the buy right now. The buy, I'm putting it on this overlapping swing low that overlaps with the gap itself. And I ended up taking it on ES. All right, so I'm looking at the NASDAQ price action, but I'm taking it on ES. And the reason for that is because my stop loss was much closer. My stop loss was much closer than if I would have taken it on this setup here. So I'm in short and I'm using the exact same setup, right? So you can see that gap on the 2-minute on NASDAQ, but look at how much cleaner it looks over here on ES. Much smaller gap for me to get in on. And I'm putting my stop above the last swing high. At this point, I was really looking for price to drop below London session low on S&P, because as you can see, we've got two levels of liquidity. We have these equal lows down here and London session low. So I was extremely confident that we would hit this level, but let's see how price played out. So everything starts to look good. And you can see how much further NASDAQ is than S&P. NASDAQ is already under the like 915 low. The S&P is nowhere near. And I put it in the note, like ES is lagging behind heavily. It was really annoying how weak the Nasdaq was in comparison to the S&P. And I'm still marking out new levels that are being created, right? So we have a new 15-minute fair value gap here. We did not go into it yet, and price continues to get closer to London low on Nasdaq. But look at how much further we are from London low on S&P. We ended up going into this little buy side imbalance here. So this is all turbulence for me. But this was the last level I needed to break for me to get to my target. And this is where the reversal started to happen. So watch Nasdaq. Nasdaq takes out London session low. When this happens, it starts to react off of it. This to me seemed like it could have been divergence, because you have Nasdaq taking out London session low, S&P nowhere near. So I felt like, okay, this is probably a time I need to cut my trade, because I don't want this to be a situation where SMT is happening and I get stopped out with, a clear signal that I could have avoided. So in the notes, I said ES still really far from my target, so I may close if Nasdaq starts to reverse, potential SMT. And to me, this is exactly what happened. So I closed out of my trade on this bullish candle right here on Nasdaq. I closed out of my trade on ES. Here's what I looked at on Nasdaq. This began to look like a bullish breaker block. Okay, you have a low, a high, a lower low, and then you have this candle that looks like it wants to make a higher high. So what I did was I started to prioritize that for a potential long. All right, so watch Nasdaq. You're gonna see me draw out the line that I'm watching for a candle closure, that right there. So I'm on the 5-minute chart, and I'm looking for a candle closure above this line. The moment I get that on the 5-minute, I put a pending order, and by pending, it's me holding my finger on the trigger. I put a pending order for price to come back and touch it, and I put my stop below this low where London session was, okay? Because that's the liquidity that was reached into. At that point, I'd be targeting the high of news, all right? So this is what that looks like. You see price is making its way up. Now here, S&P starts to lead a little bit. But you can see where I got my note here. I'm waiting for a candle closure. S&P is rallying a little harder than Nasdaq. But I think it's the next candle that we get that close. I think it might be the next one after this one. Okay, it's this one. So right there, I put my entry in. You can see where my stop loss is. And my 2R was actually before we got to the news high, which was good. That way I can get out before all the liquidity was hit. But watch what happens. Look at this right here. Do you see this line that is marked 15-minute? It's a 15-minute sell side imbalance that I assumed would not hold. I assumed it wouldn't hold because when I saw candles pushing through this 15-minute gap, I began to assume, oh, okay, I'm good. This isn't going to hold. But it was this gap right here that actually held. Now I'm on the 5-minute chart, but this line, you'll see it later, where it ended up being a 15-minute gap that rolled over and stopped me out and hit my original target. So let me show you that. So you can see how the 5-minute candles, they trick you. It makes it look like this gap isn't gonna hold. And look at how S&P is just pushing higher, 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 right? So I ended up removing that line for the 15-minute. And right there, no later than I removed the line, you can see the 15-minute gap kicked in and it held. And I ended up drawing a box this time. But you'll see in a second, I think I go back to the 15-minute. Okay. Let me just move this. Yeah, no, this is still the 5-minute, but I'll show you in a second. So what I put here was wrong on the long side today, okay? And this was my second trade for the day, all right? Every single trading day, I get two opportunities. If I lose the first trade, I get one more opportunity to trade, and if I lose that, then I'm done for the day, right? So the first trade, I closed with a small profit, and this one I was completely stopped out. So that was it for the day, because it was likely that this thing was going to go ahead and sweep these lows, right? And I even put it in here. These lows will likely be swept. These equal lows and London session low, right? But at the time, I was out of ammo for the day, okay? All right, so that's where I stopped the recording, but I'm gonna go over here to the chart, and you can see that there, okay? So there was the trade on, here's the 15-minute, right? You can see there is that 15-minute gap right there that I had denoted by a single line. Price went into it, one candle, two candles, and on the second candle, that's the one that reversed and caused price to hit the original target, and so on to previous day's low. And you can see how we just bounced right off of previous day's low. But if you look over here on S&P, price went right down, took out those equal lows, and landed in a 4-hour imbalance. All right, so that was my trade today. Today was a challenging day for me, okay, because of the back and forth, right? That's no fun. But the only way I can improve upon this, I would say, is I need to just remember to back up a little bit, because if I have that line there, right, if I have that line showing me it's a 15-minute gap, I got to remember to jump back up to the 15-minute and gauge that gap, okay? It's very dangerous to look at price action inside of a gap when you're on a lower time frame than the imbalance. All right, so what I'm saying is, if you're looking at a 15-minute imbalance, you got to pay attention to the 15-minute, because if you look at it on the 1 minute and the 5 minute, those candles can trick you when you're going into it, okay? But that's the breakdown. I hope that made sense. If it didn't make sense, message me with any questions, and I'll definitely offer some clarity where I can. But where I thought that we were going to take out the news high, we didn't. Instead, we rolled over off of this gap and continued lower. All right, so today was a break-even day for me. I actually did not lose any money out of those two trades, but nonetheless, really decent day.